The good news is we now have this pool of capital, which is 10x what it used to be. And that's just great, right, for Bitcoin. And that's what's going to propel Bitcoin to that. That we need that pool of capital if we're going to get to 500,000 Bitcoin this cycle, which I think we will. But we need the massive volume of capital, and we now have that. So we don't need anything else. This is a long-term thing. You got to do some long-term planning. But like if you're a millennial, you actually have an amazing opportunity right now. Now, 98% of the people will not take that opportunity. It's just a fact. They're going to do the wrong thing. You can always count on people to do the wrong thing because they're going to follow the trend. They're going to follow the herd, and the herd says, "Buy the house, settle down, plunk this, that's what the herd says. But you have to go the other way if you want to get rich. If you want to do better than the average, you have to do something different than the average. And so I think, I encourage younger people to say, your best bet right now is to put all your eggs in Bitcoin. That's your best bet. And if I was 30, that's 100. I would have 100% of my net worth in Bitcoin. That's what I would do.
In his recent interview with Theya, veteran mathematician and Bitcoin maximalist Fred Krueger expressed his bullishness for Bitcoin. Over the years, Bitcoin has performed tremendously, and he believes that it is truly unlike anything we've ever seen. With this in mind, Krueger emphasizes the importance of long-term planning and sees a unique opportunity for millennials. He suggests that despite many people following conventional paths like buying a house and settling down, those who want to achieve financial success should consider taking a different route. He advises that to achieve better than average financial results, individuals need to do something different from the majority. In this context, he implies that investing in Bitcoin, which is not yet a mainstream choice for many, could be a more attractive path. Krueger strongly advocates investing a significant portion of one's money in Bitcoin. He personally states that if he were 30 years old, he would allocate 100% of his net worth to Bitcoin, indicating his high level of confidence in its future growth and potential. We will now show you more clips of Fred Krueger and explain Bitcoin's performance in the previous years in depth. Please take a little time to like this video and subscribe to the channel to show your support. Thanks and enjoy.
If you put things in a log space and you see a line like this, and you see that it is trending around a line, which it is, right? And it also happens to have peaks at the line and troughs at the line, but that's not even the critical part here. The critical part is that it is trending around a line, right? And it has, the red area is 2 standard deviations above the line. The green area is 1 standard deviation below the line, okay? And that's just an observed behavior, right? So we've observed that it doesn't ever go below 1 standard deviation of the below the line. Do you guys know what maybe I should say what a standard deviation is, right? So in a normal distribution is defined by 2 criteria. It's defined by its mean, its average, right, and its standard deviation. And here we have a pattern which is a mean. The mean is growing linearly with time, okay, here. And the standard deviation is, right now it's 0.3 on this thing in log space. And what that means is that you can either go up by 10 to the power 0.3, which means it's a double. That's 1 standard deviation. Or you can go down, you multiply by 10 to the power negative 0.3, which is equivalent to a cutting in 2. So sort of over a year, the best way to think about this is we might double or we might go down by half in a year. Now, it's not the same to say over a long period of time, this thing tends to have some mean reversion to it, right? So if you're at one of these kind of bubble peaks you have a higher probability of correcting back down towards the middle. So it's not sort of a memoryless process. It is a sort of a mean reverting process. So this power law tells us a lot about if in fact this is the correct model of Bitcoin, and the statistical data here is really strong, right? So as a person with a stats background, I can tell you don't see stuff like this in anywhere, right? With this kind of correlation, this is really, really, really rare, right? Like when I saw this for the first time, I was like, oh my God, and because you don't see this kind of behavior ever. And why this is so special is that you'll notice that it's starting at 10 to the minus 1 here, which is 10 cents, right? And it's going all the way up. And this was an earlier version that stopped in 2020, but of course now we're almost up to 100,000, right? So we're up to 10 to the power 6, right? So we really have gone, 10 to the power 5. So we've gone up 6 orders of magnitude in this chart, right? And the fact that you've gone 6 orders of magnitude and still stayed within the power law is just, earth-shattering, kind of like a discovery. So, I and others have observed this power law, and the first person to observe it was this crazy Italian physicist Giovanni, who observed it in 2014. Nobody gave him the time of day, and everybody instead focused on stock to flow, which is a little bit of a version of this. I don't want to go too far into stock to flow because it's not really a great model.
As the interview continued, Fred Krueger explained an interesting pattern in Bitcoin's price movements over time. When Bitcoin prices are plotted on a special type of graph called a log-log scale, they follow a straight line, which is unusual and significant. This line is surrounded by 2 areas: a red one, which is 2 standard deviations above the line, and a green one, which is 1 standard deviation below. Historically, Bitcoin's price has never fallen below the green area, showing a consistent pattern. Over time, Bitcoin's price tends to return to this trend line, meaning if it gets too high or too low, it eventually comes back to the middle. This pattern, known as a power law, is rare and remarkable, especially since it has held true as Bitcoin's price increased from 10 cents to nearly $100,000. This observation was first made by an Italian physicist named Giovanni in 2014, but it didn't receive much attention at the time. Krueger highlights that Bitcoin's consistent price behavior makes it a powerful model for understanding and predicting its future movements.
The stock of Bitcoin is sort of, by definition, it's a function of time. And so it's just a mathematical function of time, just because the emissions of Bitcoin are programmed, right? So it's because stock to flow is a monotonic function of time, it's correlated to time. But since the price of Bitcoin is correlated to time with the power law, it therefore follows that stock to flow will also be correlated with Bitcoin price. So there is some correlation, right, that we're observing. So the correlation of stock to flow, which led everybody to say stock to flow is right, comes from the fact that there was this power law. What they got wrong is that there was this implied causality between supply and price, which is not correct, right? And so, and it is not correct that the fact that the halving reduces the supply by half logically implies that the price has to double. That's just not correct, okay? And it is obviously the case that if you have a reduction in supply, that is good for the price of Bitcoin, but it doesn't logically follow that the price of Bitcoin should double. So, that's kind of and it's just, we could go into a long discussion as to why I believe that, but But basically, the way I think that me and many others, right, are coming to the view that what we have with Bitcoin is we have a model where Bitcoin is getting adopted more and more and more in a very steady way, right? So you can see how many people have one Bitcoin, for example, right? And that number is also a power law with time. So the number of whole coiners is growing to the power of 1.4, as it turns out. Okay, that's the power of. You can also look at how many people have $1,000 worth of Bitcoin, and that is growing to the power 4. So that's a power law too. You can look at how many people have 1 million Sats. Okay, that's roughly a power of 3 to the of Bitcoin of time. So there's all these power laws which stem from the fact that Bitcoin is getting adopted. Why? Because it's better than gold. It's more movable than gold. It is more securitizable than gold. And of course, it has the same hardness of gold. So you've got these 3 key assets that make Bitcoin a very useful product for many, many people on this planet. And so because of that, overall, Bitcoin is growing. And it's growing at this rate. And the price is also growing at a faster rate. Now, it may be the case that Metcalfe's law is also at work, where the number of users is growing at, say, the cubed, and then Metcalfe's law takes that to the squares that, so that the power is multiplied by 2. So that gets you to power 6, roughly. But the main thing is usage is growing according to a power law, price is growing according to a power law, and also hash rate is growing according to a power law. And I think that's a very good mathematical model for how Bitcoin is working today.
Extremely well said.
That may change 20 years from now, right? It may change 10 years. A lot of people have said, Fred, the ETF is going to change it this year. And I'm saying, listen, I'm going to be and change it to the upside, right? People are like, this ETF's going to we're going to go to $1 million a year this year. Now, if that happens, great. All I can say is we've lived through 15 years of data, and we're very, very tightly within this power law. I would say as a statistician, I'm saying unless I see otherwise, I would expect the next 15 years to resemble the last 15 years. And if that's the case, I would expect Bitcoin to go up by 64 times over the next 15 years. And that's the number, right? So and this is where it's very hard to get your head around, right? But in a power law, if you double the amount of time that you give the process, right, you don't double the price. So you know, in another 15 years, you don't double the price from 64,000. What you do is you take the price to the 6th power, 2 to the 6th power, 64, because the power law is roughly a power of 6. So something like somewhere between 32 and 64 times, that would be the statistical behavior of Bitcoin that we would expect in another 15 years.
What are your thoughts on Fred Krueger's perspective on Bitcoin's future and its unique price patterns? Do you think investing in Bitcoin is the way to achieve financial success, especially for millennials? Share your thoughts in the comments section. If you found today's video informative and would like to receive more insights and updates on cryptocurrency and global finance, please consider liking the video, subscribing to our channel, and enabling post notifications. Be sure to stay tuned for our next episode, where we'll uncover more about the fascinating developments in the crypto space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we look forward to seeing you in the next video.